and thank you for tuning in to our Markets at a Glance update for June. U.S. stocks rose during the month as investors expressed continued optimism about the economy and its continued recovery resulting from widespread COVID 19 vaccine efforts. The U.S. economy added a robust 850,000 non farm jobs in June, while the unemployment rate rose slightly to 5.9%. The increase is attributable to more people returning to the workforce than jobs filled. Now, although unemployment has not quite returned to pre pandemic levels, other economic indicators have raised concerns. Notably, the Bureau of Economic Analysis reported that May's inflation rate was 5%. This was the highest inflation rate in 13 years. But what's more, the core inflation rate, which excludes volatile food and energy prices, soared at a rate last exceeded 29 years ago. Market observers are currently engaged in an animated debate as to whether recent inflationary pressures are temporary or likely to last beyond 2021 and 2022. Those engaged in this debate continue to speculate the extent to which inflationary pressures will influence the U.S. Federal Reserve to scale back its stimulative monetary support programs. It appears central bank officials will likely keep overnight bank borrowing rates near zero for the foreseeable future. Further, the Fed will likely also continue its $120 billion per month securities purchasing activity until the economy has returned to full employment. In our latest chart of the month, we look at the Federal Reserve's current balance sheet. This chart illustrates the extent to which the Fed has aggressively pursued purchasing assets like U.S. Treasury securities in the open market. Assets held by the Fed are now at their highest level in history. In addition, in our monthly report, we note current concerns about COVID 19 variants, including the highly contagious Delta variant. Rising COVID cases continue to jeopardize the pace of global recovery among countries in areas with lower vaccination rates. To read more about this news and its effect on our fund performance for June, please check out our latest monthly investment